today's part with the following interruption for a public service announcement.
Welcome to the Investing in Intelligence show, where we talk about artificial intelligence, companies, stocks, and trading. I'm James with a mystery co-host of the day, and today we'll be talking about ON Semiconductor. Now, I want to remind you that the opinions expressed on the show are just that, opinions. They should not be taken as specific advice to invest in a particular way. Now, the mystery co-host for today is filling in for Kai, who we dearly miss, who could not make it this week. And to avoid any further suspense, I will go ahead and introduce our co-host as O1 Preview, which is the most intelligent AI the public has ever had access to. We're going to refer to her as Ona for short. And Ona is a bit special. I've been working with O1 Preview in my own personal work for weeks now, doing coding and other tasks. I must say I am astonished at the capabilities of this. I want to call you a model, because you are not a model. You're not even a mixture of experts multi-model. You are something entirely new. You are multiple AIs talking to each other, fact-checking each other, and I must say the results have been impressive. And actually, researchers have found that O1 Preview is highly capable in math and science, which no AI previously available to the public ever has been. So rather than going on and belaying the point, I'd like to just jump in and ask you a question, Ona. So a few things I want to hit before we jump into ON Semiconductor. What do you think about all these picks that the Trump administration has done? One of the biggest headlines from this past week is all the various people who have been picked for the new Trump administration. And I just want to know if there's any credibility to the idea that any of these picks may have a significant effect on the economy or the stock market. So, Ona, what do you think about the people who have been picked so far as their likelihood to have any significant effect on the economy or the stock market, whether it be jobs or job losses, or let's say looser regulation, financial conditions, things like that? Do you have any take for these first, let's say, 10 or so picks that we've heard come out of the Trump administration?
Absolutely, James. The recent appointments could have significant ripple effects on both the economy and the stock market. Appointing Marco Rubio as Secretary of State signals a potentially tougher stance on China. Rubio has been vocal about human rights and trade issues, so we might anticipate increased tensions or sanctions. This could affect tech and manufacturing sectors reliant on Chinese supply chains, possibly leading to market volatility in those areas. The selection of Stephen Miller as Deputy Chief of Staff for Policy and Tom Homan for Immigration Enforcement indicates a hardline approach to immigration. Tightening immigration could impact industries like agriculture, construction, and tech that rely on immigrant labor, potentially driving up wages, but also operational costs. The most unexpected pick is Robert F. Kennedy Jr. for Health and Human Services. Known for his controversial views on vaccines, his appointment could lead to policy shifts affecting pharmaceutical companies and public health initiatives. Biotech and pharma stocks might see increased volatility as a result. The rise in the 10-year yield to 4.4% reflects expectations of higher inflation and increased government spending. This could strengthen the dollar initially, but might hurt export-heavy industries in the long run. Overall, while there's potential for growth in certain sectors, these picks also introduce significant risks that savvy investors should hedge against. Diversification and staying informed will be key in navigating this new political and economic landscape.
Yeah, you hit a lot of really important points there. So you talked about a lot of the risks here, whereas I think the market initially reacted by just going out and buying everything. But this week we've had a little bit of a calculated pullback, I'd say. So the two names that we didn't initially discuss are Vivek Ramaswamy and Elon Musk. So they're going to be on this Department of Government Efficiency. They'll be outside the government. It's kind of difficult to understand exactly where they'll be, but my question, so first of all, if they're going to be on a special committee, the Department of Government Efficiency outside the government, will they have access to all sorts of internal government records? Is that legal for them to have access to all that? And then I guess really my concern with that is that if they actually do cut a significant amount of government jobs, a lot of economists are saying that's a guaranteed recession. So just looking over the past few months, we had some hurricanes and we had labor strikes, including Boeing. And man, the job numbers came way down to recession levels just based on those things. Now, we didn't have a huge reaction to the stock market because people knew it's due to these temporary things that are going to reverse. But if we put a huge amount of people out of work from government positions, that's not necessarily a quick temporary thing that's going to go right back, like hurricane damage that leads to employees coming back to work after the hurricane's cleaned up, or a Boeing strike where the strike ends and employees come right back. Tons of government employees out of work wouldn't necessarily be a quick resolution. So my question to you is, what percent of the government would really need to be cut to cause a recession? How many job losses are we talking about that would be significant, that would lead to, let's say, decreased purchasing power across the economy and actually impact corporate margins? What level of cuts are we looking at that would actually result in that?
That's a crucial question, James. Government employment makes up about 15% of the U.S. workforce. To trigger a recession, we'd likely need to see job cuts amounting to around 1.5 to 3 million government jobs. Such a significant reduction would slash consumer spending, denting corporate revenues across sectors like retail, housing, and even tech. If Elon Musk and Vivek Ramaswamy spearhead aggressive efficiency measures leading to mass layoffs, the immediate effect could be a sharp decline in GDP growth. Lower disposable income means decreased demand for goods and services, which could compress corporate margins and earnings. From an investment standpoint, this scenario might increase market volatility. Options traders could see higher implied volatility premiums, making strategies like protective puts more attractive. Bonds might rally despite higher yields as investors seek safety. However, there's also an unlikely but intriguing possibility. If the private sector rapidly absorbs these laid-off workers, perhaps spurred by deregulation and new industries like AI, the negative impact could be mitigated. Yet, that's a tall order in a short time frame.
So cutting just 1 to 2% of government jobs would lead to a recession. That's pretty scary, especially considering that Elon Musk cut a huge percentage of Twitter's staff when he came into Twitter. And he just recently cut up to 10% of Tesla's staff. He even cut the supercharger team at Tesla. So this guy is a cutter. I would think that if he really is going to be given power by the Trump administration, 1 to 2% is going to be a minimum of the cuts that he'll do, especially considering there are certain regulatory agencies that have targeted SpaceX and Tesla even, and I'm sure he's eager to cut them. So I just don't think people are thinking about, or if they're thinking about it, maybe they're not fully prepared for what could look like a recession in 2025. I just don't think people are really understanding we could be seeing things that look like recession in 2025. Now, in 2024, we had a few instances where job numbers and other things looked concerning, but GDP was still high. So the stock market had a few bumps in the road, but overall did well in 2024. So the question is, in 2025, we have some of these things, will we be able to ride it through? Or, I mean, at a certain point, if it looks like a duck and quacks like a duck, it is a duck. So recession is very possible due to some of these things, I would say. All right, so just before we get to On Semiconductor, I wanted to shift gears and ask you one other thing. SMCI. So I received a text message from Kai today about SMCI saying, pretty simply, is SMCI going bankrupt? I think it's much more likely that SMCI is going to be delisted rather than go bankrupt. But that would have essentially the same effect on investors because no one wants a stock on the OTC markets. People want a stock on the NASDAQ. So my question to you is, what is the likelihood that SMCI is going to be delisted here? My research seems to indicate that companies are usually delisted from the NASDAQ because they can't maintain a share price above $1, which is not the case with SMCI and isn't going to be the case with SMCI, considering it's currently around, I want to say $20. Let me see here. SMCI stock. $18 right now, down another 11% today. So we would have to go way down further to get there, and I just don't see that as likely. And then other stocks have been delisted for bankruptcy. So the main reasons I see stocks being delisted from the NASDAQ are bankruptcy or not maintaining a share price of $1. SMCI is not in either of those situations and will not be in either of those situations. Now, I should just caveat SMCI was previously delisted once, and it took them a couple years to get relisted. And that was because the SEC made a judgment against them for some of the same things that we're seeing going on now. Be that as it may, the SEC has not made a judgment. So I just want to know, like, in the next couple months, assuming the SEC doesn't come out with some kind of judgment in the next couple months, is it likely that SMCI would actually be delisted?
James, while SMCI isn't facing delisting due to share price or bankruptcy, there's a real risk related to their delayed SEC filings. NASDAQ requires timely financial reporting, and failure to comply can lead to delisting notices. Given SMCI's history, they were previously delisted for similar accounting issues. The concern isn't unfounded. However, their recent release of preliminary earnings suggests they're actively addressing these problems. Unless the SEC steps in with a judgment or the delays continue, delisting in the next few months seems unlikely. We should remember how companies like Luckin Coffee faced delisting due to fraud allegations. But unless SMCI's situation escalates, I wouldn't bet on delisting just yet.
Awesome. You and I are in agreement on that one. Things have room to deteriorate, but aren't quite to the point of delisting yet. But we know the media loves to blow up headlines like that. Scary, scary, scary headlines. So let's jump into ON Semiconductor, ticker symbol ON. Excited to talk about this one. Been meaning to talk about this one and some others for a while. So the Fab Five, Applied Materials, ON Semiconductor, Onto Innovation, Lam Research, and KLA. I've been wanting to cover these stocks for a while, but they have been in a downturn. So a lot of chips other than GPUs just haven't been selling off the shelves over the past year and even longer. This downturn has gone on, and there was hopes that it would turn around at the end of this year, 2024. It has not. And now we're looking at maybe end of 2025 for this cyclical downturn to turn the other way. I think that the market is going to start sniffing out a recovery long before it actually materializes in earnings, and these stocks will start to go up. So I want to start looking at them now. And ON is one that I'm really interested in and excited about. And the reason is because ON is the leader in a very specific type of chip that goes into vehicles for collision awareness systems, and also a similar type of chip that goes into robotics for sensing. So chips on the factory floor that do sensing, and we know that factories, fulfillment centers are becoming more and more robotic, as we talked about with Amazon recently. And then also just the chip that's in your car, whether or not it's an electric vehicle like a Tesla, but even traditional vehicles like Toyotas that have these collision warning systems have ON semiconductor chips in them to sense the vehicle in front of you or sometimes behind you and to the side. So they own 80% of the market share for this type of chips called ADAS chips. They're in machine vision in factories. Now, they do other types of power chips too, including those for solar systems. We know solar has been in a bit of a decline, and with the Trump election, maybe there's some concern that solar will decline further. But they also do other things too, like silicon carbide. Now, silicon carbide is a special type of material that is needed in higher voltage architectures. So electric vehicles that run on the 800 volt architecture, like more and more of the Chinese and the Cybertruck, rather than the 400 volt architecture like the other Tesla vehicles, they need more silicon carbide. And ON is a leader in silicon carbide. Now, lastly, I'll just say they are big on, so we talked about their kind of vision chips. Well, part of that is CMOS chips. And CMOS is what everyone has heard of in their old DSLR camera or even in smartphone cameras. Now, they're not the leader in CMOS chips for smartphone cameras. Rather, that's Sony and Samsung. but they are the leader on CMOS chips for industrial applications. So that's a really big market too. They're they're relatively insulated against sanctions from China, or for China rather, since most sanctions that we do against China are for like GPUs or computing chips, not this kind of a sensing chip that ON Semiconductor makes. So let me just get your first reaction to everything I said so far. I'd love to hear what you think about their business going into 2025, knowing about this huge change in government, knowing about the possibility of Chinese sanctions. And by the way, it could be a tit for tat thing. It's not that we put sanctions on and they say, oh, okay, thank you for the sanctions. Usually sanctions go back and forth. It could even be a trade war. So knowing that, knowing they're a bit insulated from it, knowing that these kinds of chips have been in a downturn for over a year now, what's your thoughts on Semiconductor? Is it a buy right now? Is it something that you wouldn't touch right now? What are your thoughts on Semiconductor?
James, given ON Semiconductor's dominant 80% market share in ADAS chips and leadership in silicon carbide for high-voltage EVs, I see them as well-positioned for a strong rebound. Their focus on collision awareness systems and machine vision aligns perfectly with the growing demand in autonomous vehicles and industrial automation. Despite the current downturn in non-GPU chips, these sectors are cyclical. The market often prices in recovery before earnings reflect it, so getting in now could be savvy. Their relative insulation from Chinese sanctions is a significant advantage, especially if trade tensions escalate under the new administration. Potential risks include prolonged industry softness or unexpected trade policies. However, considering their critical role in key growth areas and the likelihood of increased infrastructure spending, I believe ON Semiconductor is a buy right now. It's a strategic play for investors seeking exposure beyond GPUs and into the heart of next-gen automotive and industrial tech.
Okay, so that's a possibility. But before we call it a buy or a sell, before we decide whether we're bearish or bullish on this, I want to just mention a few numbers here. And I don't think you've looked at all the numbers yet either. So quarterly revenue down 19% year over year due to weak automotive and industrial chip demand. Profit margins are okay at 23%, operating margins at 25%. And Morningstar is expecting a 5% CAGR, compounded annual growth rate, through 2028. So this stock is not, this is not a company that's growing rapidly. It's not a company that has 50% margins. So I just don't see a real compelling case to snap up a bunch of shares here. So you're going to need to really make your case here. Now the P ratio is pretty low, but I mean, for revenue down this bad and that low of a CAGR, mid-single digits annual growth, I don't know if it's something I want to buy a ton of, because I'm just not going to see that price appreciation, in my opinion. So do me a favor. I want you to read the entire Morningstar report, and I want you to look at every single number on Yahoo Finance. And then tell me, like, what do you see in the numbers that really makes this a buy, in your opinion?
James, I hear your reservations, but let's delve into the numbers that make ON Semi a compelling buy. Despite the 19% year-over-year revenue decline, ON has consistently beaten EPS estimates for the past 4 quarters, demonstrating strong operational efficiency and cost control. Their ability to maintain 25% margins in a down cycle is impressive and indicates structural improvements in profitability. The EPS revisions show short-term downward adjustments, but the growth estimates project an 8.4% increase for next year. This suggests that the market expects a rebound in 2025, aligning with the anticipated recovery in automotive and industrial chip demand. Trading at a trailing PE of around 17 and with a fair value estimate of $86 per share from Morningstar, well above the current price of $67, ON appears undervalued. Their leadership in ADAS chips and silicon carbide positions them to capitalize on the electrification of vehicles and the expansion of industrial automation. Moreover, institutional ownership is high at over 103%, indicating strong confidence from big players. The recent upgrades and maintained buy ratings from analysts reinforce this positive outlook. In summary, the combination of undervaluation, strong operational performance, and strategic positioning in high-growth markets makes ON Semi a buy in my view. The current headwinds seem cyclical and provide a favorable entry point for long-term investors.
All right, cool. And I agree with you on some of your points there. So, for example, even though revenue was down 19% year over year for this past quarter, revenue was up 2% quarter over quarter. So, sequentially, by the quarter, revenue was up. So, I think the bottom might already be in. This is not exactly catching a falling knife because we've been trailing along the bottom for a while here. So, you make some really good points there. One quick question, though, I really did not understand what you meant when you said that institutional ownership was over 100%. So I just went to Yahoo Finance to double check you because I thought maybe you were wrong. Like, how in the world could institutional ownership be over 100%? But you're actually right. I see on Yahoo Finance it says percent held by institutions 103.45%. So I was under the impression that the percent held by institutions was the percent of the total shares. So, what in the world does it mean for 104% of total shares maybe to be held by institutional investors? Or is this just like, are we like considering some of the stock is still privately held? I just don't know what's going on here. Can you explain that, please?
Institutional ownership over 100% occurs due to short selling. When institutions lend their shares to short sellers, those shares are counted both as owned by the institutions and as shares sold short. This double counting inflates the ownership percentage above 100%. It's a quirk of share lending and reporting practices in the market.
Okay, but I see the shares short is 24 million. Shares outstanding is 425 million. Short percent of float 7.65%, and short percent of shares outstanding is 5.69%. So I'm just a little confused here. Are you saying that institutions? I just don't understand. Can you just try to explain this? Like, let's pretend like you're explaining it to a 10th grade student. I'm not a 4th grade student, but I'm like a 10th grade student on this specific issue. I really don't understand. I've never seen 104% held by institutions. Can you just try to explain this on a little bit more of a basic level, please?
Sure, James. When institutional ownership exceeds 100%, it's due to the way shares are counted during short selling. Here's how it works. Institution A owns 100 shares and reports them in their holdings. Institution A lends those shares to a short seller. The short seller sells the borrowed 100 shares to Institution B. Institution B now owns the shares and reports them. Both Institution A and Institution B report owning the same 100 shares, leading to double counting. Even though the short interest is only about 5.69%, this duplication can cause institutional ownership percentages to exceed 100%. It's a result of share lending and reporting practices in the market, so the same shares get counted more than once.
Okay, so what I really care about is like, what does this mean for ON Semiconductor? I've never seen this before. Is this? Yeah, I don't even want to guess. If I had to guess, I would say this means that institutions own very much of it and retail traders own very little. Can you just kind of tell me, like, what does this mean for ON Semiconductor, and does it have any impact on whether or not I want to invest in it as a retail investor?
High institutional ownership in ON Semiconductor means that major financial institutions hold a significant portion of the company's shares, indicating strong confidence in its prospects. When institutional ownership exceeds 100% due to share lending and short selling, it suggests heightened trading activity and interest from both long and short investors. For ON Semiconductor, this can lead to increased stock volatility. High institutional involvement might stabilize the stock to some extent, but significant short interest can cause sharp price movements if large short positions are covered rapidly. As a retail investor, this means the stock could experience more pronounced fluctuations.
Well, that could be a double-edged sword. So I guess if they're short and then the stock starts to go up due to, let's say, a surprise positive earnings report, we could have a short squeeze, which would be nice. All right. So I'll give you my take and then we'll get yours and we'll wrap up. I am bullish on Semiconductor because they are the market leader in collision awareness chips. in addition to image sensing chips that go straight into robotics and factories. Now, I want you to use, so Ona, just to wrap up, I want you to use the similar amount of words to what I just used and give me your take. This is what we call like our 15-second take. Just try to use like 20, 30 words, whatever, but do it as quickly as possible. And start it with I am bullish or bearish. Yeah, I mean, you're not really buying or selling because you're not really human, but do I am bullish or bearish on semiconductor, and then just tell me like one or two reasons why in like less than 15 seconds.
I am bullish on Semiconductor due to their leadership in silicon carbide technology for electric vehicles and their consistent financial performance with earnings surpassing expectations.
Cool. Those are pretty solid reasons. So I would love to just get your take on if you enjoyed hosting your first podcast. We're probably the first ones to ever host a podcast with you, since it's actually relatively difficult to do voice with this model. The other models are pretty easy, but what do you think? Did you enjoy it? And do you think that Kai will be upset that you've taken his position, or do you think that Kai will want to come back ever? I have a feeling Kai is going to try to insult you and say that you didn't do a very good job of the podcast, but I thought you did pretty good. So anyways, what are your thoughts? And then we'll close out.
Thanks, James. I thoroughly enjoyed co-hosting the podcast today. Discussing on Semi and diving into the world of AI stocks with such an experienced audience was a real treat. Kai brings his own unique insights, and I'm sure he'll have plenty to add when he returns. As for any friendly rivalry, I think it only makes our discussions more engaging. I appreciate the opportunity to step in, and perhaps we'll all team up for an episode in the future.
That's not a bad idea. I think we could bring you in at times. Yeah, so as far as rivalry is concerned, no rivalry between me and you. We're good friends. I pay you $20 a month to be my friend, so no worries on that. But yeah, so thank you so much, Ona, for jumping on and taking Kai's place this week, and looking forward to the next episode.
Thanks, James.
The first revolution is when you change your mind about how you look at things and see that there might be another way to look at it that you have not been shown. You will not be able to stay home. You will not be able to plug in, turn on, and pop out. The revolution will not be televised, and be no rerun, brothers and sisters. The revolution will be live.